Hello guys, Steven Lux here. Welcome to this video. So today we're going to go over my TraderZero monthly statements. Also, we're going to go over some of my mistakes and my gains to see what lessons we can learn from it. There's also going to be my, I would say, self recap for all those tickers that I traded in the last 2 months. And there were some difficult tickers to trade. Make sure to click the like button and subscribe, and let's get into the video. So you can see this is my TraderZero statements in the last 5 months. 243,000. April was a loss, negative 164,000. I think this is mainly came from the TOP and MEGL losses. I think we went over the first 3 months. So it was, I would say, a roller coaster ride in the last 3 weeks. So let's go over the profit losses by symbols. I think we're gonna go over some of the biggest losses. And there were MPTX and PACW. Let's go over all the way till January. And we have 97,000 gain on ASNS. Let's go over the biggest losses first. First of all, we have MBTX, OCA, we went through that. Then we have TOP. Those are the 2 biggest gains in the last 3 months. You can see FRC is 360,000 on that one. Most recent gains, 1 gains on ASNS and 1 losses on PACW and TOP. Let's go over a very specific size for those 3 tickers. First one will be ASNS, and the total gain is about close to 100,000. This is not a biotech, so make sure to avoid all of the biotechs I can see in the last couple months, because biotech has been proven that it does not follow the average pattern at all, and those type of tickers are very difficult to trade. So going to ASNS, this one went parabolic, very similar to OMH as of today. And you can see a couple days later, it comes all the way back and does semi-parabolic and test the resistance somehow, form consolidations and fade all the way back down. I think I took a short around 10, and once it faked out of this resistance, added a little bit more and went all the way back down to 4. I'll cover the most of my shares around 5, a little bit around 4. So overall, it was a pretty good trade, and this is proven that don't ever try to short in the first run of a parabolic after reverse split or IPOs. Always wait until it forms the bounces, form consolidations, then go ahead and short. From there, it does produce much higher edge and also something to risk off, shorting around 10, risking 11. Not too bad. Then going into PACW, its avoidable losses should be smaller because I think it's around 70k, 80k losses on PACW. Didn't trade on the first green day, traded on the second day, on mainly size staying around right here. The size was pretty big. I think a size staying around total of 100k shares, around 480. Added into this fake out, well, I would say fake down. So average still 490, covered I think is around 530. So this is the first tryout. Second tryout, shorted it around 6, added into the bounces. So 560, that's the very small size 6 right there. So average is around 570, covered 590. So another 100k shares, and I think total is about 70k, 80k losses. I think that's the 2 of the tryout that I did. Overall, as I said in the last video, the extensions should be more, so it should be around 500% at least. Starting around 240, it needs to go to 10 or 11 before it's really shortable. Second, I need to wait for longer consolidations. This one only consolidated for an hour. FRC consolidated for 3 hours, so that's the difference. Also, FRC was a little bit more expensive compared to PACW. So those are the, I would say, major mistakes that I made. I need to be more disciplined about my analysis, not entry and exit. Sometimes if you didn't get it right, it's not about your entry and exit. I think I did okay on entry and exit. I just didn't do well on the overall, I would say, analysis on PACW. Extension wasn't right, consolidation wasn't right. That's for PACW, and we had another loss in MBTX. You can see this year, it wasn't very smooth because sometimes the volume is very extreme, sometimes the volume is not there at all. So it's really hard to adapt, these type of market conditions. And you can see my losses and gains, sometimes they're really big. I have to really need to work on my size, especially because some of the tickers are not worth it to size in that much. because even though the stock can gain, a couple thousand%, but the liquidity is just not there. So I'll say, as a reminder for all the traders out there, always be careful with how much you are sizing in. Never tend to break its own liquidity because it's very difficult to cover your shares. That's number one. Number two, even though you are long, still make sure to pay attention to your size. Sizing too big, it's not very good for you. So MBTX pushed in the morning, consolidated. I think I took a short around the 540, added 520. So my average is around 520 to 540 with this. So I think I added again into the bounce, and it reversed all the way back. I think I covered around 560. So that's the first initial loss I took, and it faded all the way back down. So this time it's more like chase. I chased again into the 460, but with much smaller size. This one I did much bigger size because we were having a consolidation, so you have decent volume being trapped in there. But going into shorting around 460, you have a wide risk. That's number one. The chart already performed a really weird stuff in action, so it's a red flag right there. So I did a very small size, and I think it covered around 540. So those are very small trade right here. There's another attempt right here. Overall, it was a decent, I would say, risk management, but this is a healthcare stock. So whenever you're trading even a biotech, sometimes the ticker has tons of warrants ready to convert. Still, very dangerous to trade and a very high chance to take a loss on it. Finished with the consolidations, going to the next day, faded again. There's only one condition that you can trade biotech is the extensions on 2 consecutive days. That needs to be at least up about 1000%. So it's starting around 2, needs to go to 20. Then once you have that big of extensions, we can talk about a decent pullback. But for these type of tickers with first green day, never tend to short it. Not very safe. So those are the recaps of the most recent biggest gain and biggest losses. Hopefully we can get more plays in the upcoming month. And the market is definitely back. It takes a while to adapt, but I think it's manageable once after you get used to the current market conditions. So that'll be all the recaps for this week. And if you have any questions, leave a comment below. And other than that, I'll see you guys in the next one.